costs tumble again at an auction of three-year debt, but are we just swinging from irrational pessimism to irrational exuberance? Well, joining me now to talk about this is Rabobank senior fixed income strategist Richard McGuire. Richard, are we seeing a swing from core to peripheries here?
Yes, I think it's part and parcel of an ongoing move since Draghi last year promised to do whatever it takes and unveiled the OMT programme. Then some, at least, of the funds that had flowed out of the periphery back to core Europe has now returned to the periphery. So we are seeing what we would term as re-Eurolization. You saw this complete fragmentation of the, or almost complete fragmentation of the Eurozone bond market last year. That process is now in the midst of a reversal. There's still possibly some way to go, but we have seen these flows returning.
And do you think investors are getting ahead of themselves? Because it wasn't such a long time ago when we saw, two-year Italian bond yields at 7.5%. I think it was in 2011.
Yes, I think fundamentally it's hard to justify this rally and the narrowing of spreads that we have seen in the periphery. Certainly deficits continue to surprise to the upside. That's something that's very notable as regards Spain. We were in the midst of a political paralysis in Italy. The outlook politically for Italy has improved but remains at the very least uncertain. Growth is now certainly softening at the core countries within Europe. We've had a botched Cypriot bailout. We've seen signs of systemic risk in Slovenia, but yet the rally at the periphery continues. Spreads continue to narrow. It's part and parcel of a grander theme, really, I think, here, which is against the backdrop of central bank largesse globally. All asset classes are performing, whether they're peripheral bonds, core bonds, high yield bonds, or whether it's commodities or equities, which are forging new record highs. All boats are rising in this tide of liquidity. We don't think that we're seeing a great rotation, as some have called for, in terms of investors switching out of bonds into stocks, but rather a great flotation where all asset classes are performing and all boats are rising.
Now, I know, Richard, that you don't like any peripheral debt, but if you had to make an educated choice, which ones would you go for? Italy, Spain, Portugal?
Yes, well, it's not that we necessarily don't like. We trade rather cautiously. We do actually have a trading book on the strategy side within Rabobank, and we are trading a pro-liquidity story, as it were, a positive liquidity story where we are long 6-year Belgium versus France. But in terms of the periphery, I think, yes, there's further spread narrowing to go in terms of Spain and Italy. But against this backdrop of market confidence, of its insouciance as regards systemic risk, Portugal certainly does look to offer some considerable appeal, given the positive carry that country affords and given the successful first step towards a return to the market which it conducted and concluded last week.